All right, let's dive into this explainer. We're going to cut right through the endless noise of stock and Forex charts to build a genuinely solid foundation for your trading. If you've been feeling totally overwhelmed by the sheer volume of information, opinions, and complex strategies out there, you are absolutely in the right place. Before we really get rolling, I want you to ask yourself a super honest question. Have you been on this frustrating, kind of vicious hunt for a holy grail indicator? You know the one, that totally fictitious, magical tool that promises high probability entries with zero effort, basically wiping out all your trading anxiety. Honestly, we've all been there, just hoping for an easy button. Well, what we're looking at here perfectly illustrates what happens when we go down that rabbit hole. This is the classic beginner's trap. We like to call it the spaghetti chart. It's that irresistible urge to just drag every new mathematical tool, every bright neon color, and every single complex line onto your platform. And instead of clarity, you just create this overwhelming, confusing clutter that literally paralyzes your decision-making. So today, we are tearing down that cluttered setup and cleaning off your screen. Here's the agenda for this explainer. First, the Holy Grail myth. Second, 3 essential beginner indicators. Third, the power of confluence. Fourth, writing institutional order flow. And finally, building true trade intuition. Let's get into it. Starting off with Section 1, the Holy Grail myth, and exactly why more isn't better. Let's face a hard truth right now. Adding 10 different indicators to your chart is never going to give you those effortless wins. Why? Because most technical indicators are just mathematical calculations based on past price and volume data that's already sitting right there on your screen. They do not predict the future, they just reflect the past. When you expect a line on a chart to act like a crystal ball, you're setting yourself up for a really frustrating love-hate relationship. You end up wasting all this energy blaming the tool instead of just learning to read the market for what it actually is. Which brings us to Section 2, 3 essential beginner indicators, where we start building your actual foundation. The crucial point here is to stop chasing magic and master the building blocks that give you actual context. First up, moving averages. Think of tools like the 9 and 21 exponential moving averages, or EMAs. Again, these aren't predicting price. They're just giving you the average price over a specific time frame. Plop these on your chart and you instantly get context for short-term shifts in momentum. Zoom out and they show you the big picture trend. If the price is consistently riding above these averages, buyers are in control. It's kind of like the moving average is a structural floor, supporting the price as it climbs. Our second core tool is the RSI, or Relative Strength Index. Look at how this visually measures momentum, swinging back and forth like a pendulum between 0 and 100. It's essentially your early warning system. It tells you when a trend might be stretching just a little too far. So when it pushes above 70, that's a signal that buyers might be exhausted, what we call overbought. On the flip side, when it dips below 30, it's a warning that sellers are losing steam, meaning the asset is oversold and might be ready for a bounce. And third, we have the MACD, the Moving Average Convergence Divergence. Notice how the moving averages down here converge, meaning they squeeze tightly together, and diverge, meaning they pull apart. When a stock shoots up quickly, those lines pull apart. But eventually, the price consolidates, the lines converge, and boom, you get a crossover. These crossovers are absolutely vital signals. They tell you that the front side of a massive market move might be wrapping up, and a shift in control from buyers to sellers is right around the corner. Moving into Section 3, the power of confluence. This is how we stack the odds in your favor. Now that we've got our core indicators, let's talk about the real secret sauce of professional trading, confluence. Think of confluence as the mortar holding your indicator building blocks together. Instead of just relying on one isolated RSI reading, confluence happens when multiple technical signals align at the exact same price level, usually a major supply or demand zone. When you've got 2, 3, or 4 different reasons pointing to the exact same spot on your chart, you are confirming strong institutional interest. You're no longer guessing, you're heavily stacking the odds for a highly reliable setup. Let's actually build one of these high-probability trades right now, step by step. First, you spot a psychological round number, let's say 1.1000 in Forex. Humans love round numbers, so major orders tend to pool there. Second, you look left and see this exact price overlaps perfectly with a historical support level. Third, you draw an ascending trend line that just so happens to intersect right at that same zone. And finally, as the price drops into this master zone, your RSI dips below 30, confirming it's oversold. That is confluence in action, and that is a trade you absolutely want to take. Next up, Section 4, riding institutional order flow, or reading the market's true tone. Confluence definitely gets you into the right zones. But if you want to truly master the market, you have to read the institutional order flow that creates those zones in the first place. Think of trend direction, those higher highs and higher lows, as a wave on the surface of the ocean. You can easily see its height in movement from the beach. But institutional order flow, that is the hidden, incredibly powerful current running beneath the water. That current dictates whether the surface wave will push you forward to your profit target or just violently crash and leave you stranded. So, how do we actually tap into this hidden current? Well, you start by defining your directional bias on higher timeframes, like the 1-hour or 4-hour charts. Then, you hunt for quality signs of institutional involvement. You're looking for displacement, which is just a fancy way of saying rapid, aggressive price movements that leave empty gaps behind on the chart. You also want to watch for liquidity engineering, which is when the market intentionally tricks retail traders, hitting their stop losses before reversing into its intended direction. By tracking these footprints, you make sure you're trading with the big players, not just getting chopped up by random retail noise. Which brings us to our final section, number 5, building true trade intuition, moving from mechanics to mastery. Here's the beautiful thing. When you combine a clean chart with your 3 core indicators, hunt for high-probability confluence, and align yourself with institutional order flow, you finally graduate. You stop mechanically following rigid rules and develop genuine trading intuition. But this mindset requires serious discipline. You've got to preserve your emotional control so your interpretations stay objective, not driven by FOMO or greed. You need to consistently trade with the prevailing market tide. Focus on the big structural picture, rather than sweating every tiny 1-minute fluctuation. When you do this, you start executing trades smoothly because you finally understand the psychology driving the market. I absolutely love this quote from our sources because it hits the nail right on the head. Like learning to read a person's tone as well as their words, understanding order flow lets you hear the market's real message. That newly developed intuition, built on the solid foundation we've laid out today, is exactly what lets you hear that message loud and clear and trade confidently right alongside the smart money. As we wrap up this explainer, I'm going to leave you with a crucial question to think about before you execute your next trade. When you look at your charts, are you just blindly trusting a lagging, squiggly mathematical line? Or are you actually reading the conviction, the flow, and the psychology of the major players powering the market? Master the latter, and I promise you, your entire trading journey will fundamentally change.